prison. I too sick, man, I gon' need a medic. Obviously I fly, LV on my belly. Don't be the kind, that time my pocket heavy. Have money on my brain, keep talk what you saying. Talk out with the code that I serve, not the lane. Ice on my neck that shine like a chain. Now that money, me no know what you're saying. Bitcoin hot, I'm study stocks. I want all the hood, I'm a not out the app. I'm flying like this, now I don't need a gas. I'm up on the line, anywhere up on the map.
Just hit it. What's up, guys? Welcome back. Malik here, and today we're going to be looking at my two trades on the NASDAQ 100. From yesterday, I actually pointed at a key level. You can see the market tap that purple line, which is a key level where I expected some reaction as soon as price touched up to there. So price actually came up there, tapped that level. Typically, you tap that level, you have probably a reversal. You can see it before here. This is similar, but it kind of broke through the range a bit more. So I was thinking today would have been like just a Cuck day. Like it wouldn't really do anything. It would just be like a big swing up, a big swing down, and then close close to where it opened, and that's what actually happened. So today, just feeling that I only did two trades today. When they went bad, I just didn't try to chase it because I could feel like it was one of those days where it would knock you out regardless of what was your direction. Because if you tried to hold the trade to like maturity or to at least get some time on the trade, you'd have gotten basically swept out just in price movement. Like it's going both ways, to the highs and to the lows, and it will hit you out. So let's just look into these two trades where I got knocked out and where I was wrong. We can actually have a better look at. So let's put this to, yeah, it's on the right time zone already. This was the day. No, this was the day. So you see today closed bearish, but not below the previous range. So it's kind of still bullish, honestly. Okay. So this one I opened it on 558. I kind of tried to strangle the market with a buy and a sell, but one just has a bigger risk than the other. So one had a 30 risk and one had a 19 risk. So one was like more biased than the other. So the one with the 30 had a more bullish bias, so I had a bigger stop loss. But I still wanted to play both sides. I got knocked out both sides. I figured that the market was gonna do its own thing, like some weird doji candle, so I just didn't bother to force it. So this one I entered at on the 5 candle. So let's find the 5 candle here. So that's 5 hours after market open. So that's around, let's see, that's 12 p.m. 15292.19. And then I got stopped out on the 9 candle, which was, what's that now? Stopped out on the 9 candle, so that was about 4 a.m. Eastern time. So let's find a 9 candle here. This is exactly where I got stopped out at 278.94. So the market kind of came and tapped me out before pushing up for a bit. I mean, if I was able to withhold this, I would have made money on the push up, and this would have been around 12 o'clock. Let's see if that would have been 12. No, that would have been 9. 9 would have been the high of the day, where you should have probably sold it, and then 12 o'clock would have destroyed you if you didn't catch that move to the downside. So this one I lost 30 on. Second one, we'll just be using the same, or no, different wicks, because one closed earlier than the other. So this one I entered at the same time on the 5, and this one was at 15292.74. Let's get back to Cairo time. So I got stopped out on the 13 candle. So this one was obviously a sell position, but the market started to break higher, and it came up until it hit me out at 9 o'clock. And some would say that's like manipulation before that distribution to the lower side, reach for that liquidity and then come right back up. So I'm kind of bullish on the day. We can see kind of reach for this level. Didn't fully come through it, but it reached down here, still close high, and kind of went bullish after that. That can damage anybody. That can damage someone who is in buys, and if you're in sells, you think the market is gonna go down, and then it comes right back up and messes with your emotions. So this one was a loss of 1917. So I'm just working on the discipline to not trade too much, because you can see the curve is coming back up where this is just the account balance kind of coming back up now, and I'm just trying to keep the discipline and not really just revenge trade or anything like that. Just 2 trades. If I'm not feeling like the market is gonna go in my direction, it's totally not worth it to force a trade. But if the trade is going in my direction, I'm thinking I might start to double down and try not to get wicked out, and then actually let my winners work for themselves. And then my losers, I'll try to cut them earlier, just not try to make too many trades when I'm having a bad day. So I guess that's why discipline is important. But I'll see you in the next video. It's a short video today, 6 minutes. Nice. And I'll see you tomorrow. All right. Nothing important happening tomorrow. I think CPI is next week, Tuesday. So that's kind of what the market is playing for. And we might be in a range. But I'll see you in the next video. Bye-bye.